Good morning, everybody. Welcome to this morning session. I hope it's not too much of a morning after the evening before. Everybody's bright and awake. We're going to talk about Altnets and investment and kind of what's happening for the next phase of investment in Altnet infrastructure in the UK. And we have a very exciting panel of people who can really give you some deep insight. My name is Gita Sorensen. I run GOS Consulting. I do policy and regulatory advice to the Altnet sector and others. And my panel here is Oliver Bradley, who's investor in the sector from Macquarie. We've got Sam Horrocks from GigaClear. We've got Jeremy
Sorry.
Oh, apologies. Oh my God. Fiber optic. I'm so sorry.
No problem.
Almost the same.
It is not the same. I'm so sorry. That was a slip. Okay, well, at least I got a laugh.
Sorry, we're all paying attention. Yeah,
Exactly.
we caught it.
Yeah.
That was just to make sure they were awake.
Yeah, exactly.
Yeah, well, or that I'm awake, whatever. Jeremy Chalot from Netomnia, or whatever.
Community fiber.
Community fiber, yeah, where you were at one point, yes. And Roland Kelly from All Points Network, All Points Fiber Network.
There you go.
So we're going to try and kind of canter through a number of different topics today. We're going to try and keep it quite loose and conversational. We'd quite like to have questions and contributions throughout our discussion to kind of keep it lively and keep it going. The first thing we thought we'd talk about is the balance between wholesale and retail for Altnets in the UK market. We've had people come in being wholesale only, we've got people coming in being retail only, some people doing both, some people moving between the two, and the kind of the market dynamics clearly have been quite different for the two types of businesses. So I think I'll start by asking Ronan about his experience in that, because his business has started as retail only, moved into wholesale as well, and is doing something slightly unusual compared to the rest of the Altnet sector.
Sure, okay. Let me just check with the audience first of all. So maybe could I get a show of hands for those of you that are familiar with All Points Fibre? Okay, so there's a reasonable cohort. For those that are not familiar, just by way of background, so All Points Fibre was a collection of 5 companies that had one common investor, which was Fern Trading, which was part of Octopus Investments. And they had originally started out, like many of the Altnets, as vertically integrated providers, building out fibre, providing IP services to the customers that they connected on that fibre. And like what we've seen with many of the Altnets in the UK marketplace, they got to a certain degree of penetration, but the brand equity that each of those entities had wasn't really strong enough to take them further. Wasn't strong enough to take them, let's say, north of 30%, where the break-even figure typically hovers in and around that level for most of the networks that are being built. So after about 4.5 years, the collection of companies were brought together under the one investor, and they were combined. So it allowed them to strip out a lot of the duplication that they had. So, 5 marketing departments, 5 HR departments, 5 finance departments, et cetera, et cetera. So there was good synergies there with that. But they also took the decision, in order to get the penetration up higher, that they needed to basically transform the business model into a wholesale-only business model and try and attract other providers onto the networks. Now, part of the challenge that they had, and they knew this from the get-go, was all the work that was done by the entities that were building the fibre brought them to a collective homes passed figure of about 500,000 premises, which, high five to the teams that built it, great job, well done. But 500,000 premises is roughly around 2% of the addressable market in the UK. So when you go knocking on the door of a big retail provider and say, hey, do you want to sell your services across our wholesale footprint? They go, yeah, absolutely. How many premises you got? 500,000. Yeah, come back to us when you've grown up. So it's a challenge for any of the players that are out there, that if you don't have that critical mass. So we knew this was going to be the case from the get-go. So instead of just being a wholesale provider of our on-net footprint, that 500,000 premises, instead we set out from the very beginning to create a platform that would allow us to provide access to that on-net footprint, but would also allow us to provide access to the retail partners to any of the large, meaningful fibre networks across the UK. So we created a brand new state-of-the-art platform, purpose-built for wholesale only. That allowed us to jettison all of the old retail systems. So we consolidated down from over 300 software systems across all the companies down to 9 core systems that run the wholesale platform. We built a brand new state-of-the-art network that allowed us to connect to all the main internet transit points, the peering points, the content providers, but also it gave us a core backbone that allowed us to locally enable the modern PON terminology for local loop unbundling of the OpenReach exchanges and the CityFibre FXs as well. And what that allowed for then was between BT Wholesale, OpenReach, CityFibre, Sky for Ethernet, and our own on-net footprint, we've now can offer the retail providers through one integration exercise, they can now get access to over 23 million premises now at this point in time. So it's quite attractive now. So when you knock on their door and say, hey, would you like to sell across our network? How many premises you got? 23.5 million. Okay, let's have a conversation. It's a different dynamic. So it's been an interesting journey because, first of all, we had to re-educate our business on what it meant to be a proper wholesaler, because everybody in our business was either focused on building fibre or they were focused on B2C retail activities. And they didn't quite, many of them didn't quite understand the change that you had to make within the business. It was fundamentally, it was a cultural shift for the organization, but also from a process capabilities point of view, from the approach that you take to supporting your partners rather than individual consumers, had to be much more robust. The level of transactions that you were dealing with was much higher as well. So the efficiency with which you handled every touch point that you had with your partners had to be super streamlined. Everything had to be fully automated. The old approaches of, oh, if it didn't quite work out, we'll just knife and fork it through with manual processes. The problem is that doesn't scale. So a lot of the challenges that we see now, because what we're seeing now that we've got a critical mass on the platform, we're being approached by a lot of the altnets who are now going, hey, we'll do wholesale because we've kind of hit that terminal penetration with our brand equity as well. So we'll wholesale our network. All points, can we make our UPRNs available on your platform? And we'll go, yeah, let's have a look at it. The main thing we go to look at, over and above size, we typically try and talk to the altnets that are in and around 1 million premises passed. We'll come down further down the curve to the smaller ones in time, but we're trying to start off with some of the larger ones. But the main thing that we encounter is we typically see in their PowerPoint deck, they've now put a box beside their retail channel that's called wholesale. And they think that's it done. You know, from an ethos perspective now, because we're wholesaling the network, it's as simple as that. When in reality, what they haven't thought through in many scenarios are what the interfaces need to be, what support functions need to be in place, how they avoid things like channel conflict, etc., if they're still continuing to retail. So there's a whole lot of boxes that many of them haven't really thought through over and above just getting over the religious hurdle of do we wholesale or not. And I think that's part of the challenge the industry faces is they need to get people into their organizations that truly understand what it means to be a wholesaler, what it means to be working with partners rather than direct to end consumers, what support systems need to be in place and how slick the processes need to be as part of that.
Mm-hmm. Thanks, Ronan. So basically, there's like, as you said, almost like a religious question is, am I retail only or am I going to venture into to wholesale? And a lot of altnets are coming to the conclusion that if their retail brand can't pull them up to that level of penetration they have to explore wholesale. But then there's a whole host of new challenges that face them when they want to get there.
Yeah, it's not just the ethos change. You've
No.
got to put in place the structure to allow, and quite often it's a separate part of your business because those that are retail oriented in their mindset and their approach, those approaches don't work when you try and do it on a wholesale basis.
I mean, and that's, I think, one of the challenges. Oliver, from an investor perspective, you've got experience elsewhere as well as in the UK. What do you think the balance is between retail and wholesale in terms of making altnets viable?
Yeah, I mean, in general, from an infrastructure investor perspective, all else equal, we much prefer the wholesale model because, you know, we as infrastructure investors, there are different types of investors obviously, but as infrastructure investors, we want to focus on the infrastructure. We'd like to have infrastructure that people share. We typically don't like to get involved in competitive businesses, in retail. That's a bit outside of our comfort zone in terms of that when we're starting to get into branding and marketing and things like that. That's getting outside of that that infrastructure risk profile that we prefer, which is sort of hard assets, quite simple businesses that have a high capital component to them that we make available to share them. So all else equal, we much prefer the wholesale model. The challenge is, it is quite hard to make it work properly, and Ronan alluded to some of them in his comments, that, and part of it is scale, because if you're a big national ISP, it's quite a big project to go onto a network, and therefore it's only worth it if you can, if you've got enough scale to do it. And in the time I've been looking at this from when I was in government 10 years ago, some of the early conversations I would have with Sky about their intentions. If they have 1 million homes or a good path to 1 million homes, then we can do it. But those goalposts have moved quite a lot over time, so it's a much bigger number now. So part of it is scale, but part of it also, I would say, and I think Ronan was alluding to this as well, is there's a bit is also wholesale culture. So the big difference between Spain and the UK, in my view, and we've got a very successful large wholesale only business in Spain. This is a 10 million home footprint. Is in Spain has a culture of wholesaling, and what I mean by that is all the main large ISPs are used to wholesaling from each other. They make their network available to others, and that includes Telefonica sometimes wholesaling other people. So that's a big difference with Spain and the UK. Is the incumbent is willing where it feels it's appropriate, not relatively limited, but where it feels it's appropriate to wholesale of each other. And so what that means is when you're talking to an ISP about wholesaling on a network, you're talking the same language. There's sort of standard SLAs that everyone understands. You're talking to their wholesale team when you're negotiating with an ISP. You're not talking to their partnerships team or whatever. You're talking to their wholesale team, the team that does wholesale agreements. They just know how to do it. And that process makes everything a lot simpler. And I think the problem we've had in the UK, dominated by 4 or 5 large ISPs, a wholesale strategy can only make sense, really, if you're going to have some of the national ISPs in them. And then the final thing I'll say is, and Ronan touched this as well, just saying, oh, my network's open to wholesale, I've got large ISPs who can access it, so we're all good, and the volume's going to come in, is not necessarily the case. And it also depends what it is. You've got to the national ISPs have got to be motivated to sell on your network. And we found in Spain, we've observed in Spain, that, like, for example, in more rural areas, just signing contracts with the large ISPs is not sufficient if they're not going to be actively marketing in those areas. And so actually in some of the rural areas in Spain, some of the companies focused there have had to keep a retail business just to make sure they can fill their network. And that's one of the challenges in more rural areas in the UK. Is it cost effective for Sky and TalkTalk and Vodafone to be properly marketing in rural areas and doing what that involves, door-to-door knocking sometimes and things like that? And how do you incentivize them to do that? So scale is one piece, but it is quite a complicated story.
So what's the secret to successful retail only, Sam?
Yeah, it's interesting listening to the conversation and dynamic there, and I'm not sure how familiar everyone is with Hyperoptic. We're 2 million homes passed, 1.4 million of those are homes passed serviced. We're in around 60 towns and cities across the UK, but concentrated in London and therefore in urban and densely populated areas. And for us, like you say, Geeta, we're a retail-only provider at the minute, and we've been very successful in that. And actually, we're now looking at wholesale, but we're looking at wholesaling others' networks rather than wholesaling our own network. Although that is an option. So let me explain a little bit more why does it work as a standalone retail provider? Well, Ronan touched on the penetration rates there. Our average penetration rate is above 30%. And all of our cohorts trend towards 50%, after around a 5-year period. A big success for us has been the focus on new developments, which is then partnering with the builders as they're developing properties and infrastructure. And we are there from day one, and we've seen penetration rates consistently within 3 years of around 70% in those individual buildings. And that's a penetration rate that we've been successful in delivering and then maintaining. So, that will give you a sense as to why we can make a retail-only a business work. Then you come to and our mindset has always been about disciplined capital allocation first. So where can we make the best returns? And very successful in retail. But then where next? What about wholesale? Well, when you look at, because we are in multi-dwelling units, because we are in densely populated environments, then we've a relatively high churn, but a significant proportion of that is people moving property. And when they move, like 80% of our churn is related to people moving. They don't tend to move that far. So our new off-net product that we'll be launching literally this quarter is around just opening up our presence in the exchanges where we already offer on-net services. So it's a retention and actually an acquisition play without us having to expand our brand presence any further than we do today. So, as therefore customers look to leave hyperoptic because they're moving, we'll capture a significant proportion of those, as people will naturally look to our website to come and join hyperoptic and would ordinarily find they can't receive our services. Tomorrow they will be able to. So, a really kind of smart application of wholesale that is value accretive for us. And then, the third piece is, well, maybe we could wholesale our network, but at the moment, for the points made by the panel, it's, if you're a retail player, you've got to adopt a different mindset, and if you take a capital allocation mindset on top of that as well, we've got lots of opportunities from a retail and then kind of, near net, call it that, wholesale opportunities.
So Jeremy, you run wholesale and retail.
I do. And I think it's fair to say that a wholesale in the UK is extremely hard. From a technology standpoint, I'm not too worried about it, but when I founded Netomnia and New Fiber, so first I founded Netomnia, so for the college, to just build a wholesale platform, and then you quickly realize that culture that Oliver is talking about just doesn't exist in the UK. So if you want to speak to BT or to Sky or to Virgin Media or to Vodafone or to TalkTalk and trying to get them on your network to build a successful wholesale platform, it's extremely difficult. Obviously, BT is not going to currently go on any other network. Sky, it took them, 15 years, maybe 15, 16 years from the first City Fiber presentation to move from the OpenReach network onto the City Fiber network. And obviously, VMO2 only exists basically on two networks, one being Nexfiber and the other one being its own network. So, and when you look at it with that lens, you have the vast majority of traffic on those three networks that are just not currently using any other altnet. And therefore, if you have to build a wholesale-only proposition, and you kind of don't have access basically to those three networks, and you have to focus on TalkTalk and potentially Vodafone only, assuming that they even come. Because if you look at TalkTalk and Vodafone, they also don't have a very strong track record in doing wholesale with other altnets. So Vodafone currently is on City Fiber and Community Fiber, and arguably Community Fiber, I think Olaf has had a big sway basically in convincing Vodafone to do that, and therefore it really limits the ability to create a wholesale platform which is successful in the UK. And that goalpost kept changing. So everybody was talking about that 1 million home. I got 1 million home more than 2 years ago. Yeah. Then the goalpost is, let's carry on talking. And then I got to 2 million. Is it enough now? No, it's still not enough. And then I got to 3 million. Is it enough now? I'm not sure. And then you've got basically that number that just keeps moving. And then you realize basically on that journey that you love to do a wholesale, but the scale required to create actually a wholesale platform in the UK is significantly higher than what any altnet standalone basically has today. And hence why we've been talking about consolidation for so long. So then you kind of, okay, so in that case, have to be vertically integrated, which obviously creates its own challenges because now investors, as Oliver mentioned, they would rather you having basically long-term contracts, not taking basically any retail risk. We'll argue the retail risk is fine, but that's a different issue. And then you end up with, okay, so you've got a pool of capital that is not available basically to you just because you can't deliver wholesale. So you end up having basically to do it on your own, and you try to build a successful retail play. And I think Hyperoptics done a very good job at it. We'll argue Community Fiber's done a very good job at it. We've done a relatively good job at it, but there is no really other options currently in the UK, and this is not that we are not all trying. And what Ronan mentioned is the 23 million is fantastic. It's a big network, but this is not what Sky is going to use. This is not what Vodafone is likely to use. It's not what Virgin Media or BT is going to use. That does not address, I think, the main wholesale constraint basically in the UK is the fact that the larger players in the UK who have the lion's share of the market share just don't really want basically to wholesale, or if they do, as we described, the goalposts keep changing. It takes a very long time. It's extremely hard to agree any terms. I mean, with some of them, I've been talking with them for years, and therefore you have. It's hard to know. Obviously, CD Fiber has been, I would argue, relatively successful at it, but they have 4.5 million homes, and they got Sky 12 months ago. So it's hard to see. I think the goal, we all want wholesale. Don't take me wrong. I think wholesale is fantastic. I would love to have it. Just I can't.
That kind of, don't forget, if anybody wants to interrupt us with questions or contributions, please do. But that kind of leads us quite neatly into the whole scale issue about consolidation, the viability of smaller providers. Do you want to kind of start us on that one, Oliver, as the investor's perspective? How important is it that the UK altnet sector consolidates?
Yeah, I mean, the sort of the point that I was thinking about as Jeremy was talking there is when we're talking about wholesale networks and you talk about the 23 million network over here and a national network over here, is the point about wholesale networks is you don't really need too many of them. I mean, the whole benefit of them is here's a network that everyone can share. Having multiple wholesale networks is not necessarily ideal if you're designing a national network. Now, it can work, but it's not necessarily ideal. So just to take a step back, how do we get to where we are today? Because obviously, everyone appreciates that the UK sector is not in great shape at the moment in terms of capital. So I think, how do we get here? Well, I think you have to go back to COVID, really, and that was when a number of things came together to create a bit of either a perfect storm or the right conditions, which was a combination of the fact that COVID itself obviously suddenly made everyone realise that the internet was important and an important infrastructure item. Other things that infrastructure investors had invested in weren't doing so well. So suddenly ports, airports, roads, I mean, pretty much anything, other than maybe regulated utilities, that people had always assumed would be very, very safe, suddenly were not in ways that people hadn't expected. You then had a very, very, very low interest rate environment where money was essentially free. In Europe, interest rates were negative. I know they got negative in the UK, but they got very, very, very low. So you got all these investors who had invested in low-risk stuff that suddenly wasn't working. They could see that the internet was now a core infrastructure sector. Cost of capital was extremely low. Now, why is that particularly relevant for fiber networks? Well, the profile of building a fiber network is it costs a lot of money at the start, and then once it's built over the next 5, 10, 15, 20 years, that's when the cash comes in. So your cash is quite far in the distance. Your costs are right now. And when interest rates are really low, the discount rate that you apply to that, how much you have to discount those future cash flows is a lot lower itself. So just it all lent itself to or our other investments aren't working, we can't get a return anywhere else, money's really, really cheap, let's invest in this capital-intensive thing that is essential to what people are using now, and the returns will come later, and it's sort of ideal. The problem was, everyone sort of realized that at the same time. And so lots of things got financed. Lots of business plans got financed. And arguably some of them shouldn't have done. Some of them weren't very viable. But also just, it led to this real land rush of resources and capital, of trying to build quickly. People also just sort of finding their way, right? These were a lot of business plans. People hadn't done it before, so people were making mistakes in how they build it. They were fighting each other for resources, for contractor resources, for human resources within your own company. Getting the right hiring people was really difficult. All of that meant that for these new altnets, well, obviously there are some exceptions, but for a lot of these new altnets, it was just harder than people thought. Building a fiber network, that's easy, right? You're just building a trench and sticking some fiber in it. It's not like building a power station. The problem is doing it at scale is actually quite difficult, and then costs can run up. So everyone coming together, all rushing to build, all competing for resources, meant that a lot of these altnets that did get financed, did raise equity, did raise debt, struggled. And then you sort of roll forward a couple of years. You then have the reverse of all this. So interest rates then start going up, so money becomes more expensive. The fact that it's taken quite a long time to build has sort of become, the fact that these businesses need more and more capital is becoming problematic because capital is less available. And then you have a few failures, a few difficulties, and that starts to sort of affect the rest of the industry and sort of pollute the rest of the industry. And we had a big of a sentiment problem. So 2023 was maybe sort of the high point in terms of capital availability for the sector. A couple of big altnets sort of took quite a lot of that capital. That the banks didn't have a great time with that in terms of syndicating it. And that meant that since then, it's been really hard to raise capital. Even if your business is okay, it's been really hard to raise capital in UK fibre. No one has really thought to themselves, I really need to get myself a UK fibre investment for the last few years. And these are very capital-intensive businesses. These are businesses that you need to keep on putting money in to grow the network, but also just to bring on customers. Like each customer is quite expensive. It can cost up to a few £100 or more to bring a customer in. So the combination of all that meant there's been some high-profile failures. It's very hard to raise capital. Take-up's been a bit slow. There's other things that's happened. Take-up's been a bit slow. We've had a bit of the problem convincing people to move off copper onto fibre. So all these things have come together to make the business plans quite challenging. And then when these businesses need capital, they can't raise it. And so now we're starting to see the implications of that with some bankruptcies and things.
Yeah. So, but is consolidation an answer to all of that? I mean, the cost of consolidation can be quite high. So how do small companies navigate that?
The reason why consolidation, I think, is part of the answer to the problem is for a variety of reasons, scale is really important. So scale is important if you want to be a wholesaler, but scale is also really important just the cost base doesn't scale with the size of your network. I mean, that's the fundamental sort of economics of this thing, is the sort of headcount you need to run a 100,000 home network, a 200,000 home network, a million home network, a 2 million home network. They're not dramatically different. Obviously, they are a bit different. I don't want to sort of overstate it. But the economies of scale of these networks are really important. So for investors in the space to get a return on their equity, they need to be part of something bigger, and they need to be running these things more efficiently.
Ronan?
One other thing we do need to take into consideration as well, I think as the investors moved along the journey 3, 4, 5 years in, and the realization that the levels of take-up were significantly lower than what everybody had presented at the beginning on the PowerPoint slides, etc. The pressure increased on many of these altnets to get bums on seats, basically, get people onto the network, get them trafficking, get them paying bills, etc. And what we've seen play out here in the UK is really a massive cannibalization of the price point for services within the market. So if you look at the cost of gigabit connectivity here in the UK, it's amongst the lowest in the world. And particularly if you compare it to markets like the North American market, for example, it's night and day difference. So the real challenge you've got, and in my 30 years experience in telecoms, I've seen over the years it's very, very easy to bring prices down. It's exceptionally difficult to get them back up again without losing the customer base that you have. And I think that's where consolidation has a critical role to play, because I think those individual altnets are not going to be able to get those price points back up to a healthy level that they can build a profitable business in the long term. And it's only by consolidating up those brands and taking those offers off the table as part of the consolidation that you can start to get the whole sector back into a healthier state.
Right. Views?
Yeah. I mean, it's horses for courses to a certain extent. It's interesting listening to Oliver's history of why are we here, and I kind of reflect back on hyperoptic and the build, the monetization, and then therefore maybe naturally consolidation phase is you can see how from a broader industry perspective some of that is absolutely necessary, especially when you consider the points that Ronan made about the fact that build costs have been a bit higher, the inflationary, the interest rates higher, therefore cost of capital higher, and also builds taken longer and the returns in terms of penetration a bit lower. However, the consolidation isn't inevitable for everyone, and why I say that for hyperoptic specifically is because actually we started a little bit earlier, and started from a self-funded owner mindset, which meant that capital allocation discipline was kind of wired in from day one, and it was absolutely a build and monetization from day one. Therefore, efficient build, urban-focused build, and driving high penetration rates, and then therefore early returns from day one. And that, as I mentioned previously, we've made that work. We've driven high penetration. Therefore, actually, a sustainable business model as a standalone organization. We've created our own scale, and actually scale now for the scaling for the future. For us, is actually about incrementally expanding our footprint with the off-net proposition that I talked about, continuing to drive the penetration rates, but also doing that and creating scaling efficiencies by doing more, but at the same cost. So whether that's technology based, whether that's operational execution and discipline, such that our revenue continues to grow, our costs remain flat, and we can then therefore create a sustainable standalone business model. But that's and there are maybe one or two others like that, but from a broader perspective, understand scale and consolidation.
Yeah, I mean, going to try to be not too controversial, but
Go ahead. Be controversial, Jeremy. Go for it.
No, I mean the story of hyperoptic is a fantastic story, but let's remember the target of hyperoptic in terms of premises passed basically per year. The business are massively downscaled basically their goals basically across the year. So I understand that it might be a successful business, but at some point the communication was for hyperoptic to get to 4 million homes or 5 million homes, I think, and currently it's 1.4 million premises serviceable. So I think it's quite important to not rewrite history. So there are a lot of companies in the UK, including companies that everybody considers successful, whether it's community fiber or hyperoptic, where they all had to stop their build. There are lots of issues, struggle to get wholesale. So it's fine basically to tell everybody that no, we are fine, everything is fine. But in reality, everybody knows that the telecom game is a scale game, and nowhere on earth anybody believe that having 1 million home is having scale basically in the UK. So this is a market with 30 million homes. 1 million is nothing. It's and this is what we've learned basically through that. So everybody who started, and I don't know if I was lucky or not lucky, but for me, I started Netomnia just after COVID. So actually, we raised our first capital on the 7th of October 2020. It's kind of just when the first lockdown basically was kind of stopping and everything was reopening, managed to get some money. And therefore for us, we arrived basically in a market where we had to apply quite a lot more financial discipline than many other players who had been basically in that market in a world where where they were already motoring, therefore they had access to cheaper capital. We never got access to cheap capital. So for us, the first time we did a proper debt raise was in, I think, March or April 2023, I think. That was right in the middle of, you had the Silicon Valley Bank going bust, you had Credit Suisse basically being bought by UBS for nothing. And so for us, we had basically to face basically the harsh reality that CityFibre had taken a lot of money, struggled to syndicate, Nexfibre took a lot of money, Community Fibre took a lot of money, Hyperoptic took a lot of money, and then Nexfibre stopped their build, Hyperoptic very slow build, Community Fibre stopped their build, CityFibre very slow build. Let's be clear on exactly what happened basically in the UK market. And so for us, we had to face basically that harsh reality that then you try to scale, you've got expensive capital, you can't get wholesale, and therefore for the last, I think, 2 years or more than 2 years, everybody's been clear. Scale will be achieved through consolidation, not through basically organic build. Or if the organic build is going to happen, I'm yet to find basically which provider is going to deliver that. I think I'm almost kind of the last man standing at the moment in still building basically in the Altnet sector. And Hyperoptic is still growing a little bit their home, but let's look at the trajectory in terms of premises passed basically per month or per year. It's anemic compared to several years ago. This is the same thing for All Fiber. They build 500,000 network and then stop. And this is the same story basically across the industry. So I think it's quite important to realize that, and therefore consolidation is the only path basically where you can get a scale network, where you can get basically the margins basically that you will expect. And on top of that, as Ronan mentioned, pricing is not great currently. So I think fixed broadband ARPU, let's be clear, you have currently Vodafone basically with in the UK very happy at the level that they have in terms of fixed broadband ARPU, which is around 25, 26 pounds. You've got TalkTalk around 25, 26 pounds. And you've got Sky, Virgin Media, and BT basically dropping basically their pricing, and therefore a lot of business plans have basically some massive increase basically in term of retail ARPU basically in their plan, and they are extremely hard to deliver. Arguably, the only ARPU which is currently growing at a very, very good rate is the Openreach wholesale ARPU. So if you take that for the last 2 years. The growth of the wholesale ARPU of Openreach has been fantastic. So 2 years ago, it was in the region of 14 pounds, and now it's in the mid-16. So this is the reality of what we are being faced with. And I think I was listening to Simon Holden yesterday saying that, I forgot the number, I think he was saying 30 to 40% discount on Openreach. It means that CityFibre operates basically with a business plan that shows that a wholesale ARPU of 11 pounds is fine. I don't understand how it's fine. So it's for me, I look at all those things and I think everybody has to face actually the reality. And for the last 2 years, it's consolidation is the only path that will actually give enough scale that actually wholesale can happen. That will give enough scale that you can get basically the level of margins that are required to have basically sustainable businesses in the UK, and then ultimately enable basically lenders and investors to make basically some returns basically in that sector.
Yeah. Thanks, Jamie. I want to hand over to Oliver, but just so Allpoints Fibre have managed to merge some relatively small businesses together. But other than that, we're not really seeing, you're talking about the benefit of getting scale through consolidation, but is that viable at the small end of the business? I know you guys don't necessarily represent the very smallest businesses, but Oliver, do you have a view on that?
We're invested in quite a small business.
So
I think actually it's more important for the small ones. Look, consolidation is hard, right? So it's fair to say, you're looking at the market, well, why aren't we seeing everyone consolidate? Well, we sort of are. slowly, but it is hard. I mean, and these are complicated, paper mergers,
It's costly.
even cash mergers. It's costly to an extent. I wouldn't want to. I don't think it's that costly. I think, look, there's some integration costs, but there's a lot of synergy. So I don't think it's costly, but it's complicated because you've got different shareholders with different things coming together. Even in cash deals, it's complicated. But it is happening, and it will happen. And smaller ones will get together with smaller ones, and you get sort of a snowball effect, where they get bigger and bigger and bigger, and then do it. Just two small things I just want to add to the conversation so far is one, a big problem as well that we can't sort of escape, and why we got to the situation we're in is because it's taken longer to build, because it's cost more, because penetration has taken a bit longer to come up. We as investors or as companies or as Altnets have found ourselves spending a lot more on OPEX, not just on CAPEX. And so by being not as efficient as we could be as an industry, and obviously, again, there are exceptions, you found that actually, your how much money, how much capital you've invested actually goes beyond the replacement cost of your network because you've had to spend so much time in operating because it's taking you too long to. So that's making the bar higher and higher. The final thing I want to pick up on what Ronan said, which I've sort of maybe challenged a little bit, is I really don't see consolidation being about improving ARPU. I don't disagree that ARPUs in the UK are too low relative to the value of the network. But the reality is they are where they are, and to your point around Vodafone and TalkTalk, they're gonna sort of lead the market. In my view, consolidation is not, when I'm thinking about consolidation, I'm not thinking, oh, this is a way for us to increase our ARPUs. I'm thinking it's a way for us to be more efficient on the cost side. Because these businesses can run at a high margin. They cost a lot to build, so the capital intensity is very high, but they can run at a high margin. And I think we've got to accept that this country has relatively low ARPUs. I don't think we have the power to change that. But the goal of consolidation is to make it work in that market context.
Is it not the case that, kind of paradoxically, by entering the wholesale market and having to compete against the open reach regulated prices, like you were just saying, Jeremy, you having to discount against that's kind of, I don't think you're going to attract any of the large ISPs unless you discount against open reach because they have big costs in integrating into a new access network. If you enter into the wholesale market and attract those, then effectively you are cannibalizing not just your retail connections, but also the retail ARPU, because you're enabling the reduction of the ARPU by the large ISPs through the discounted wholesale. So it's kind of a little bit of a vicious circle potentially. I don't know what you think.
Yeah, no, I mean, I think the discount is completely normal. I think as a challenger, when you arrive in a market, one of the best way to disrupt the market is to discount basically a product. That's any company in any market, unless you're Apple or it tends to be kind of one of the primary strategies. So you can try to disrupt with technologies, or you can try to disrupt with pricing. But even when you arrive at technology, you tend to do pricing. I think my point was slightly different. I think there is a world between a 40% discount on OpenReach and a 15% discount of OpenReach. And this is kind of understanding basically where the level of discounting that you need to do. And because obviously for me, I do mainly on the vertically integrated side, with the retail provider, and we don't discount by 40% basically compared to Vodafone or TalkTalk and so on. So you can see what's happening on the retail side. It's a lot tighter basically the differences. And I will argue actually what we've seen over the last 12 months is there has been many months where we saw Sky or Vodafone actually discounting below actually what we've been doing. And if you look also at the Altnet in general, and you look at the fixed broadband ARPU of most companies, and because you've got a hyper optic there, and they advertise basically their fixed broadband ARPU on companies' house. You can see that the fixed broadband ARPU for the last 2 years of hyper optic has been flat, and it's just a fact. It's just a fact of life, and unfortunately. And obviously, everybody will say, "Oh, but my back book is going fine, and the front book is not," and therefore there is all that dynamic basically, which is happening, which is true. It's we can see that. So usually you can make your back book grow, but because you have to grow your customer base at the same time as high as possible. Actually, the front book tend to drag basically everything for a long time, which then creates the problem that Oliver is describing, is when you were planning basically to run your model and you look at the cash that you're generating, it's compressing the margin. But discounting is fine. Just I was more questioning the 40% discount on the Openreach. That seems extremely aggressive to me.
So this whole front book, back book, I mean, people familiar with the concept of front book, back book pricing, yeah. So obviously, as you're saying, when you're in acquisition mode and you're growing your network, you would have predominantly front book pricing, and then you're gradually moving to back book and retention, and hopefully not discounting as much in the long run. So do Altnets have separate front book, back book pricing strategies, and do you track it really carefully, and do you have kind of, I guess, separate parameters and measures that you share with the investors as well, so you can kind of look at a projective timetable of switching across for after a period of time where you gradually move over to a higher balance of back book?
Maybe
Yeah.
I'll answer. Yes, absolutely. Maybe kind of reflect on, come back to you, answer that in a moment more fully, but come back to some of the dynamics that we're seeing from an acquisition perspective and from a wholesale perspective. And some of those acquisition prices are not arguably sustainable if you look at the wholesale costs that those ISPs are incurring. And you just do the simple maths. You run the unit economics, look at the run costs, look at the acquisition costs, and you come to a conclusion that a sub £25 acquisition price point isn't necessarily making money for a wholesale provider. So that's one dynamic that arguably isn't sustainable. And another piece, if you look at the ARPU environment more generally from an acquisition perspective, and think about we are in an inflationary environment. Therefore, those pressures in terms of maintaining those front book prices will actually increase over time. So and we've moved away now from that build phase and we've started to see consolidation, and so there will naturally be a slight shifting in for the reasons I've mentioned. A slight shifting in, arguably, that kind of acquisition environment. Nevertheless, it's going to remain very competitive. Absolutely, let's not kid ourselves. And then, therefore, you absolutely need to be competitive. You need to continue to acquire customers at competitive price points. They may change a little bit over time, but be competitive there, and then have a very kind of keen eye on when those customers that you've acquired and you've locked into a contract, how actually at the point of acquisition you can differentiate your pricing. So we're doing things like tailoring the pricing based on the premise, which looks at the competition that's there. It looks at the demographic profile also, and then introducing very targeted price increases in contract for an individual customer, and looking at the value that you can offer that customer at the point that they come to renew their contract with you. And whether that's upselling them, whether it's actually offering them additional products and services where you incrementally give them more value for either the same or a higher ARPU. Those are the traditional, I guess, incumbent strategies that are actually new and emerging capabilities for the Altnets. So because we've got we are shifting from that build, therefore focus on acquisition and penetration, and now into managing and running a larger customer base. We're evolving our sophistication in those areas. So that will absolutely allow us, when you look at next Company's House, Jeremy, to see that some upward movement in terms of ARPU performance now, and confident that it's there into the future.
What's the prediction? By how much?
Couldn't possibly comment.
Insider trading. My mobile provider, when you enter a 2-year contract, about 12 months into that, they call me up and say, do you want to start a new 2-year contract now before, so they're kind of constantly on the front foot. Is that the kind of tactics that Altnets are starting to deploy?
Part of it. Without question, it's part of it. It's a balancing act between back book and front book as well. Like, you do have to be constantly growing the base that you have there, but you don't want to do that at the expense of compromising what you're bringing in on the back book. So it's always a balancing act. I think there does need to be a shift in focus within the industry as well, across the whole community, with regard to introducing additional value-added services for the consumer. The reality is the connectivity products are commoditized. There's no getting away from that. You know, there's always going to be high churn within that space unless you can add value-added services on top that A, grow your AMPU per customer that you have, but B, increase that stickiness that you need with customers as well.
We're still at a bit of an early stage with fibre, though. I mean, we're invested in the UK in a more rural network, so it's a slightly different. The competitive intensity is slightly different. We're generally competing with VDSL products. The fibre to the cabinet products, they're generally priced quite cheaply, so we have to be competitive with that. I think what we find, though, is that once customers are on our fibre network and it works and it isn't too expensive, they're quite happy to just keep it. I mean, part of the challenge we have actually in penetration is that people are quite sticky with their, so the sort of the flip side of people being quite sticky with their provider means it's quite hard to win them onto your network and convince them to move onto your network. Once they're on your network, I think we're all mostly doing a pretty good job of keeping them, because fibre is good, it's reliable, it works. You obviously, then need to be careful with not abusing that relationship by overly increasing pricing, but you can at least keep up with inflation and people recognize it. It's still a relatively, compared to other monthly costs that people have, council tax, energy bills, etc., it's still relatively affordable for what it does and for what essentially it's your entertainment system now. I mean, it's still relatively affordable. So I think it's not all sort of doom and gloom. I think on the ARPU front, I think it's always going to be quite aggressive at the front book. But I think fibre is a good product, and once people have it, they tend to like it, and it works. And as long as it's working, as long as it's not, the providers don't take the mick in terms of abusing that relationship, then I think people tend to stick with it.
I'm keeping an eye on anybody with any contributions or questions. Please let us know. We got one at the front row. This mic coming to you. Could you please introduce yourself when you ask your question? The mic is not on.
No.
There you go.
Okay, Jem from Turknet, Turkish alternative operator. I've been following the UK, which is one of the most exciting markets for fibre, and probably has the most capital deployed and very successful rollout. But it seems on all these panels, it's all about ARPU, financialization, and it seems to be missing. Fibre is also an exciting product, and I really compare this industry to the banking, right? Because you've got these big Goliaths, like the existing banks, and they have an old school way of doing business. And actually, people like banks, but they're also very unhappy with banks because they do pay fees for everything. The credit card fees are high. And so when new banks come into the market, like Revolut or something, there's not the same old bank with the same contract and the same fees. They're saying, look, we're doing something different, right? And that creates excitement, and these relatively small startups become giants, of course. And they don't have the capex that telco does, but it seems like the UK is really missing an opportunity with all these altnets. They're all selling the same thing, 24-month contract, and even some of them in contract price increase, and we're looking at our ARPU and stuff. And at the end of the day, as a consumer, it's just another. They all look alike, and it seems like there's an opportunity for the altnets or one of them to say, listen, we're not your grandmother's telco. We're different. We do different things, and actually, you may give up on ARPU, right? But you may gain so much goodwill, free marketing, low SAC, that it may be worth it, right? Because people suddenly care, right? You don't have to knock on their door and say, really, really, I'm here. People are like, wow, I want to do this. And isn't there maybe, other than talking about your ARPU and your build cost and your home pass cost, an opportunity to say, what am I offering the consumer, and am I really different, changing the game in that sense, and to bring a different dimension to just the financial metrics?
Thanks, Tim. That's a challenge to you. Jeremy?
By the way, I love what you've done. So I'm a huge fan of that provider. So it's I think you can bring the marketing dimension to that, but I think it's you can't ignore the fact that all the capital that has been raised in the UK for this type of operator or other places in Europe is capital that come from infrastructure investors that don't do marketing, and it comes from a lot of banks that are traditional, and you just mentioned that the bank challenging the other banks. So you're operating basically in an environment where there is first a constraint on where the capital comes from, and you can't ignore that. So if you go to pitch basically all of them that it's all about marketing and disruptions and so on, I don't think you will raise that much capital. So that's problem number one. Problem number two is the fact that you operate within a market that has set some constraints. And for me, I'm a huge proponent of one or just doing no contract. So that's something that, for example, I wanted to do for a long time, because in the UK, every provider tends to offer between 12 to 24 months type of contract. Seems to be okay. If you're very happy, if your network is great and everything, then why do you need to have a contract? You shouldn't need a contract. But again, it negates the fact that we operate in an environment where all the investors and all the lenders like 15 years contracts. The type of thing that they back is whether it's data center or wholesale contract or anything like that, tend to have 15 years plus. So again, if you go to pitch and have a different mindset, it's fantastic. Then when you look at potentially some of those marketing strategy where potentially let's sacrifice some of the ARPU and so on, when you have spent so much debt inside a company and therefore you've got a fixed cost base in terms of interest cost, basically, there is limit to what you can do as well. So I'm not saying I agree, and for us at least, we try to be as disruptive as possible, especially looking at speed, trying to shorten the length of the contract, but you have to also take into account the customer behavior in the UK. So customers in the UK are used to get into a contract for 18 to 24 months, and at the end, basically try to shop around. And trying to change actually that buying pattern is not straightforward. And therefore, if you want to add a premium on that, it's quite difficult. So there are lots of challenges, but I agree. I would love to be extremely disruptive, but so far we've not managed to.
Thanks, Jeremy. I think we have another contribution from the floor here over at this end. If you could.
Just while we wait for the mic, just an additional comment and consideration on that, as well as the geographic limitations that many of these networks have. So to the point around the sales acquisition cost side of things, it's very difficult for a lot of these smaller players to move away from expensive feet on the street type sales because they don't have national coverage, so they can't use the more cost effective mediums to get the message about a disruptive approach out to the marketplace. Instead, they still have to door knock as part of that because they're small players, and I think that's where wholesale and wholesale aggregation has a role to play for them. They can extend their reach through the off-net type activities by broadening the focus of their sales.
Thanks, Ronan. Please introduce yourself.
John Irvine from White Fibre, a small scale Altnet that hasn't slowed its rollout. It has slowed because we're at 90% coverage and we're on the hard bits now. We don't need more capital. Our ARPU's grown at least 20%, maybe more in the last 2 years. I'm selling on monthly rolling, pay what you see, leave at any time contracts for the last 5 years. And I'm at 38% penetration so far. So yes, so I'm subscale, very subscale, but successful, being tarred by a few of the perception, a few of the failures in the market. But
how big is the network?
Sorry?
How big is the network?
Oh, only 74,000 RFS. And that's my point, really. So it is possible to succeed subscale, and there is room for small-scale operators, regional operators in this market, and we can innovate. I don't know why every Altnet hasn't gone for monthly rolling. We've got a great product, It's better than open reaches. Customers join and don't leave. So why tie them into 24-month contracts? So I was just answering the point from that was made a moment ago. But my overarching point is, of course, it's great to have scale. Oliver's absolutely right. My cost base, when I had 5,000 customers to having nearly 30,000 now, has barely shifted. It's broadly the same. So every new customer that's added is just pure margin.
Thanks very much, John. And we're actually out of time. So, yeah,
Come on, it's
I did
yours.
ask for
It's
questions
yours.
early on. So I'm afraid that I think it was a good way to finish off with a little bit of an alternative input here. Thank you to everybody for being here for the discussion, and thank you to the panel for your contributions.